So you've heard the names, right? Bitcoin, Ethereum, maybe even Dogecoin. And I'm sure you've heard the wild stories too. People making absolute fortunes overnight, and then others losing it all just as fast. It can feel like this exciting but also really confusing and kind of intimidating world. So, okay, let's dive in and try to make sense of it all together.
All right, so what is the big deal, really? Is this stuff the actual future of money? Is it just a super risky investment? Or is it something else entirely? In this explainer, we're going to break down what cryptocurrency is, exactly how it works, and what you really need to know.
To really get what makes crypto so different, we've got to start with one core idea. Think about the money in your bank account. It's controlled by central banks, by governments. And to send it to someone, you need a middleman, like your bank, right? Well, cryptocurrency basically throws that entire model out the window. It's decentralized, which is a fancy way of saying no one person or group is in charge. And you can send it directly to anyone, anywhere in the world, no questions asked.
So let's start with the absolute basics. What exactly is this stuff anyway? The name itself actually gives you two pretty big clues. You've got crypto, which is short for cryptography. That's the super advanced encryption that secures everything and makes it nearly impossible to fake. And then you've got currency, meaning it's designed to be used as money. So at its heart, it's digital money that's secured by code. It has no physical form, so all those pictures of shiny gold bitcoins you see, yeah, they're just for show.
This whole thing kicked off back in 2009 with Bitcoin. It was created by this totally mysterious person, or maybe a group, who we only know as Satoshi Nakamoto. The core idea was, well, it was revolutionary. To create a financial system where people didn't need to trust governments or banks, they just needed to trust the code. And since then, thousands of other coins, known as altcoins, have popped up.
Now here's where things get really interesting. See, Bitcoin was created to be digital cash, something you could use to buy and sell stuff. But because its price can swing so wildly, most people today treat it as an investment, kind of like a digital stock. I mean, think about it. You wouldn't want to buy a coffee with a currency that could double in price or get cut in half by tomorrow, right?
Okay, so if there's no bank and no one's in charge, how does anything actually get done? How do transactions even happen? Well, the answer lies in this amazing technology called the blockchain.
Honestly, this is the best and simplest way to think about it. Just imagine a digital notebook that keeps a record of every single transaction ever made. Now, a copy of this notebook is shared with thousands of computers all across the world. Because everyone has a copy, no single person can secretly go in and change a page. It's an incredible system of transparency and security all rolled into one.
So how does a transaction actually get written into that shared notebook? Well, when you send crypto, computers on the network, we call them miners, start racing to solve a really complex math puzzle to prove your transaction is legitimate. The winner of that race gets to add the transaction as a new block to the chain. And for their hard work, they get rewarded with brand new crypto. Once that block is on the chain, it's there forever. It's permanent.
Okay, let's switch gears and talk about the part that gets all the headlines. The investing. This is the reason most people get into crypto in the first place. But let me tell you, it is truly a roller coaster.
I mean, just look at this number. This is the dream, isn't it? If you had bought some Bitcoin back in 2016 when it was about $500 and you held on, you'd be looking at a mind-blowing 13,000% return. That's the kind of insane gain that creates millionaires and grabs everyone's attention. But, and this is a huge but, for every one of those dream stories, there's a potential nightmare. In just 7 months, the price of Bitcoin crashed by 65%. This is the brutal, cold reality of volatility. The potential for these massive gains always comes with the risk of equally massive losses. And this chart really just puts it all into perspective. You can see that dizzying drop from 45,000 all the way down to 16,000, and then the unbelievable climb back up, soaring past 70,000. It is anything but a smooth ride.
So why all the chaos? Why these wild swings? Well, a lot of it really just comes down to speculation and hype. People buy in based on media buzz or the fear of missing out, which drives prices up. But then, when some bad news hits, like a government saying they might crack down on it, fear takes over, people panic sell, and the price just tanks.
So, with all of that in mind, what's the bottom line? Let's try to lay out the good and the bad side by side and get a balanced look.
On the plus side, you've got the fact that it's decentralized.
It's accessible to literally anyone with an internet connection, and it allows for fast, global money transfers 24/7. But on the minus side, you have that extreme volatility we just talked about. Its privacy also makes it attractive for illegal activities, and there's a huge lack of consumer protection. If you get scammed, there's no bank you can call for help. You're on your own.
All right, to get any deeper into this world, you absolutely need to know the language. So let's quickly go over a few essential terms you're going to hear all the time.
First up, your crypto isn't actually stored in your wallet. The crypto itself always lives on the blockchain. Your wallet just holds the keys that prove you own it. Your public key is like your bank account number. You can share it to get paid. But the private key, that's your master password. It gives you and anyone who has it total control. You must protect it at all costs.
And if you need a reason why you should protect that private key, here it is. This is a totally true story. A guy in the UK is still trying to get permission to dig up a landfill to find a hard drive he accidentally threw away years ago. Why? Because it holds the private keys to 8,000 bitcoins, which are worth hundreds of millions of dollars today. If you lose your private key, you lose your crypto. Forever, period.
So here's the most crucial takeaway from all of this. It is so easy to get swept up in the excitement in that fear of missing out or FOMO, but it is absolutely essential that you do your own research, that you understand the technology, and that you are fully aware of all the risks before you even think about putting a single dollar in.
Which leaves us with the big, multi-trillion-dollar question. Is this thing a truly revolutionary new financial system, a future free from the control of banks and governments, or is it all just a massive, high-risk, speculative bubble that's waiting to pop? The honest truth is, nobody knows for sure, and the debate is really just getting started.